Hi class. In this video I thought I would show you some examples of the homework from chapter 2. So I have opened up our homework in Connect. Mine might look slightly different than yours because I'm actually in the instructor site, but it should look pretty close. So I'm in the actual homework that you were assigned, and I'm going to look at numbers 2, 8, and 10 for you so that you can kind of know how to tackle the homework. All right, so number 2, and my numbers might be slightly different than yours. The numbers change every time you attempt the homework, but the process will be the same. So we've got number 2. It says the following financial data are for the dental practice of Donna Wells. She started her operations in July, and then we've got 6 transactions. And we've got a chart that says determine the amounts that would appear in Dr. Wells' balance sheet. So to do these, and there's several of these that are similar in the homework, we've got the basic accounting equation, assets equals liabilities plus owner's equity. So here's our equal sign. That just means that everything that's over here should equal the sum total of everything that's on the right side of the equal sign. So we're going to have to work within that equation. So it says she owes $17,300 to Allen Equipment Company. So that is a liability because she owes it. She has to pay it to someone. So since she has to pay it, that is an accounts payable. There's the $17,300. Cash balance of $11,800. That's an asset because that's something that she actually owns, or the business owns. And cash, we go there. She has dental supplies of $2,800. So again, that's something that she owns that she's going to use in her business. So let's see, we got dental supplies there. And then it says she owes $3,330 to Contemporary Furniture Supply. That's a debt, so that goes in liability. And you know, I'm not sure if they're going to make us add those together or not, so let's just try it this way and see if it works. If not, we will come at it another way. That's one of the great things about Connect, is it will tell us if we are wrong or not. So number 5 says she has dental equipment of $24,850. So again, that's something that she owns that she's going to use to generate money in her business, so that's an asset. And she has office furniture, much the same thing. That's something that she owns or the business owns. So it's also an asset. And I really have a feeling it's going to make us add those two accounts payable. But let's see what it says. So we're going to check my work. Sometimes Connect is just quirky about the way it wants you to put things in. So if you can't get something to work one way, then try it a different way, and sometimes that will alleviate the problem. So it does look like they want us to add those two together. So we're going to return to the question. And I'm going to change that to the total of those two, which is $20,630. Going to get rid of the next one. That blank. All right, so you'll notice there's nothing in this column, and that's the tricky part. But we know that the left-hand side of the equation has to equal the right-hand side of the equation. So we can figure that out by using a little bit of algebra. So if we take the $45,750 and subtract or move over the $20,630, that gives us the difference in those two, and that's actually the amount of our owner's equity. So if you take the $45,750, subtract out the $20,630, gives you $25,120, and that's the amount that it's going to take to have these two totals be equal to the total on the left-hand side of the equal sign. And we're talking about owner's equity, and so it would actually be the name of the owner and then the word capital. That's the amount that she actually has as far as her value in the company. So when you read the chapter, you probably remember that the accounting equation just tells us what the company owns, which is our assets, and who has claim to those items, which is your liability and equity. So if you think about it this way, if this company owns $45,750 worth of stuff, has cash and some supplies and equipment and stuff, if they own that much value, if they were to sell the company today, who would get that money? So the answer to that question is, first of all, whoever the company owes money to, which would be their debtors, that's their liabilities, they would pay off those debts, which would be the $20,630. And then after those debts are paid, the owner would get the rest. She has claim to the rest, so that's her equity. So that's just kind of tells you who has claim to the assets, which would be the debtors, and then whatever's left, the owner gets. So we can always check our work again just to make sure we've got that the way it should be. And it says, yes, we do, which is always a good thing to see. So we're going to move on to number 8 and look at that one. So this says Harold Joseph is a painting contractor who specializes in painting commercial buildings. He's got some financial records and some transactions that they're giving us. And then one of those lovely charts that we all love. And this one's pretty large, so that's kind of why I wanted to look at this one. And then we've got an analyze part in the other tab. So let's come back over here. So this one I want to just look at because it's a little bit different than the others because it asks you for balances. So we've got cash of $59,200. So in the beginning balances line, you're going to put that. And you'll notice we have a pretty big chart. We've got several assets. It's actually breaking out these main categories of assets, liabilities, and equity into subcategories. So here's all our assets. We only have one column for liabilities, and then equity, there's our owner's capital. And then here's a column for revenue and expenses. And revenue expenses are part of owner's equity. And if you think about that, if the company does well, they have a lot of revenue and maybe some not so many expenses, so they have a good year, then that's going to increase the value that the owner owns in the company, which is right here. So these affect the capital. If they have a bad year, they have a lot of expenses and maybe not so much revenue, then that's also going to affect capital. So how the company performs, which is their revenue and expenses, is going to cause that capital to go up and down, most likely. And that's not always the case, but that's a question for, that's an issue for a future class. So for our class, it's going to cause the capital to go up and down. All right, so we got our cash in there. We got accounts receivable of $14,800. Office furniture was $34,000. Autos were $21,700. I believe liabilities were $9,400. Capital, $89,700. Oh, come on. $53,200 for revenue. And I think expenses were $21,600. Let me make sure. Nope, $22,600. All right, so once you get all of those in, then you're going to start working on the transactions. Transaction 1 says perform services for $6,760 on credit. So what they're telling you is the company provided, let's see, what kind of business are we? The company painted some stuff for somebody. And now I already forgot what it was, $6,760 on credit. So anytime the company performs work for somebody, that's revenue. So there's our $6,760 in our revenue column. All right, now here's our equal sign. Anytime we do something on one side, we have to make sure the other side balances. So in this case, we increased our revenue, and it says we did it on credit. So if it says we did it on credit, that means that the client is going to pay us in the future. So at some point in the future, we're going to receive the payment on that. So that's kind of how I remember that. We're going to receive money. So accounts receivable. And that takes care of number 1. Paid $1,780 in cash for new office chairs. So we're going to go down the line 2. And we actually paid cash. So we're in the cash column. So if we're paying out cash, we have to make that a minus. And we purchased office chairs. So the value of our office chairs, our office furniture is going to go up. Now you'll notice there's a minus and a plus. We didn't do anything on the right-hand side of the equal sign, and we don't have to because in algebra, as long as you subtract something and add something on one side, it's a wash. So we're still in balance. Received $12,000 in cash from credit clients. So again, we're receiving cash. So we're going to add that to our cash. And when it talks about credit clients, those are people that owed us money and we have now received it. So we're going to put the 12,000 here. And you'll notice I put a subtraction because this is the amount of money people owe us. So if people paid off $12,000 worth of that accounts receivable, then it should be less because we are owed less amount of money, so that's a subtraction. Paid $960 in cash for telephone services. So our cash is going out, so that's a subtraction. Make sure I get it in the right line. I think it's right there, and that's an expense. So we're going to put an expense over here. All right, now I just wanted to point this out. I said that the two sides have to be in balance. So if you add something on the left, you have to add something on the right. Subtract something on the left, you have to subtract something on the right, unless you do an add and subtract on the same side and it's just a wash. You'll notice this is subtraction here under cash for the 960. If you look over here, I did not put that 960 as a negative, and that's because in this particular chart they have the negative for us. So I did want to point that out so it wouldn't confuse you. That's kind of an odd thing about the expenses in this problem. Number 5, send a check for $6,100 in partial payment of the amount due creditors. So we paid $6,100, so we're going to subtract that from our cash. And when it talks about we paid our creditors, those are our liabilities. And we're going to subtract that because our debt or our liabilities is going to be less now because we paid part of it off, so it should be a negative. Number 6, paid salary, $7,900 in cash. Paying out a lot of cash, so that's a subtraction in the cash. And all the way over to here, $7,900 under expenses, and again it's a subtraction, but they put the minus sign in for us. Oops, I need to scoot over a little bit. Send a check for $1,200 to pay the electric bill. Going to subtract that from our cash, and again move all the way over to expenses and put it in the expense column. Perform services for $11,300 in cash. So in this case, somebody is paying us cash for services, so that's going to cause our cash to go up. And let's see, we're going to go all the way over here. I believe that's our revenue column. That's the only bad thing about Connect. Sometimes you have to scroll a lot. Paid $2,430 in cash for auto repairs, so that's an expense. We pay cash for it, so we're going to subtract that from our cash column, and we're going to come all the way over here. And now I already forgot how much it was, 2,430. And I think we're on the last one. Perform services for $13,300 on account. So we earned $13,300 in revenue. And it says that the people did not pay us cash yet. They're going to pay us later. So we're going to receive that later, which I think is the second column over. So it goes in accounts receivable. So that's all of your transactions. Now, actually, I'd advise you to check your work periodically just so you don't get all the way down through something and have one wrong number, because sometimes if you have a wrong number at the beginning, it throws everything else off. But it looks like we're right, so yours should look something like that. You don't have to put zeros or anything in the ones that don't have anything, I don't believe. But it says our answer is not complete, and that's because we didn't do the analyze part. All right, so the analyze says what is the amount of total assets after all transactions have been recorded. So you have to jump back over here. And our total assets would be everything, all of these totals at the bottom on the left-hand side of the equal sign. So if you added the 62 some odd and the 22,000 some odd, 35 whatever, and 21,700, that would be your total assets. And I'm not going to add those because we're going to move on to number 10. So this video won't be 2 hours long. All right, it says number 10, the following equation shows the transactions of cotton cleaning services during May. The business is owned by Taylor Cotton. It says analyze each transaction carefully, prepare an income statement and a statement of owner's equity for the month. Prepare a balance sheet for May 31st. So I'm not going to go through all of these. I think my best advice is to look at the book, and you can see some pictures of income statement, statement of owner's equity, balance sheet, etc. And you just follow those patterns. So you can see they've got the template down here for you, and they're telling you what goes in there. But I did want to look at it because I wanted to kind of explain where you're going to get these numbers from. So we have all of these transactions over here. Here's our accounting equation, assets equals liability plus equity. So there's our equal signs. So it asks for a income statement, which is always the first thing you do. So when you're doing your income statement, you're only going to put things that are in these last two columns. You're only worried about revenue and expenses when you're doing your income statement. So down here where it has your revenue, you're going to put a title there, and I think they usually call theirs fees income, which is their revenue account. And then you're going to look at this bottom total, $7,940. That's actually how much money they made or generated in the business. Now, when you get ready to do the expenses, this is what I want to look at. They actually are asking you to itemize those expenses, so you can't really take the total here because it's made up of different kinds of expenses. But you'll have to look down through this column, find each time there's an expense. There's $840. There's a $9,100. $318, looks like there's only 3. And so then you're going to have to read across and see what they paid. So that looks like utilities expense. This one looks like salaries expense, and the 318 is probably telephone expense, or they may have lumped that in with utilities. So you're going to list each of those separately and each of those amounts separately. And that's all there is to the income statement. When you get to the next thing, which is your statement of owner's equity, again, follow the pictures in the book. But the statement of owner's equity basically is showing how the owner's equity changed for the month. So you're going to start with your owner's equity at the beginning of the month. You're going to add net income or subtract a net loss. And then you're going to add or subtract any money or withdrawals the person took out of their business, which I don't see any. So you're going to have the beginning of the month, anything that changed their equity, and then their balance at the end of the month. To do that, you're going to have Taylor Cotton Capital at the beginning of the month, and that amount, let's see, looks like they've got balances in the first line. So to do the statement of owner's equity, you need to kind of look at this. So there's their $51,800. That's their beginning. The next thing you're going to do is add the net income or subtract the net loss. That is actually where the owner's equity statement ties to the income statement. So you would have to go back to the income statement and find the net income, which is probably there. If it's a net loss, it would be a subtraction. But find this amount here, and then it goes over here. So we're going to probably add net income. And then the next thing you're going to do is subtract out, and I said I didn't see any, but I actually saw one when we looked back up here. Withdrawals, there's $1,600 that T Cotton took out of the business. So that's going to go here, and that's actually, well, actually, I don't think they make you put in a minus because it says less. So it's going to total it for you, so you need to put in the beginning, add your net income, subtract your withdrawals, and this is your net income, your capital at the end of the month. So it'll look something like that. So that's kind of a little bit of how it looks. except for that number's wrong because we didn't fill in the whole thing. All right, the next thing you're going to do is your balance sheet. You'll see they have a template. It has three things you're going to include: assets, liabilities, and equity. This side of the balance sheet should always balance with the right-hand side when you get finished. So to do that, you're going to look up here in the chart. Here are all of your assets. So on the asset section of the balance sheet, you're going to list cash, accounts receivable, supplies, and equipment, each one of those, and then put the column total in. And that should be it for your assets. When you do your liabilities, you have one liability, so that one's pretty easy. You're going to put in your accounts payable and your column total. When you get to the owner's equity part, you should have Taylor Cotton Capital, and the amount that goes with that is not on the chart. It actually ties to the statement of owner's equity. So if we had finished this, T Cotton Capital for May 31st would be here, and we would take this amount, put it over here in our balance sheet. And once you do that, the amount here for total assets should be the amount for total liabilities and equity. And then it says which amount was transferred from the statement of owner's equity. Well, it's that amount that you just put over there. So that kind of is a quick overview of some of the things you'll have to do in the homework for Chapter 2. As always, if you're stumped, you need help on anything, feel free to send me an email. I can actually see your homework when you're working on it, so I can see where you're stuck. So I'm always happy to do that. So if you need help, feel free to ask. Otherwise, enjoy your week.